Okay, so we're going to take a deep dive into Cognex's Q3 earnings call. We've got all the usual suspects here, the press release, the transcript, my notes, and we're going to figure out what's really going on with their performance this quarter.
You know, it's interesting. Cognex is at kind of a crossroads right now. They're showing impressive revenue growth, 19% year over year to $235 million. But if you dig a little deeper, you see a company that's being pulled in two directions by some pretty powerful forces.
So let's unpack that. Let's start with the good news. Logistics is booming. Semiconductors seem to be coming back to life.
Yeah, you got it. It's like the explosion of online shopping and this global need for faster deliveries has given Cognex a rocket booster. Their logistics revenue is going through the roof, driven by all these e-commerce giants needing warehouse automation, and of course the delivery companies trying to get those packages to your doorstep as quickly as possible.
And it's not just about having more warehouses, right? It's about making them smarter, more efficient. And that plays directly to Cognex's strength in vision systems.
Absolutely. Now, over in semiconductors, we're seeing a rebound. But we have to remember, it's from a pretty low point back in 2023. Chip makers are investing again, particularly in things like high bandwidth memory for data centers. And that's good news for Cognex.
So far, so good. But I'm sensing a but coming. The press release kind of skimmed over some potential problem areas.
You're picking up on it. The elephant in the room, or maybe we should say the sputtering engine in the factory, is the automotive sector.
Their exposure to those EV battery projects seems to be hurting them.
Exactly. We're talking delays, order reductions, even outright cancellations in some cases. And it's not just EVs. The broader automotive market weakness is affecting them too. The CEO actually used some pretty striking language during the call. He said the current mood is the weakest he's seen in his 16 years at Cognex.
Wow. That's a pretty sobering assessment from someone who's seen the industry go through so many ups and downs. So we have this contrast. Logistics is booming, semiconductors are recovering, but automotive is stuck in the slow lane. What's the overall takeaway here for investors trying to make sense of all this?
It's a question of balance. Can the growth in logistics and the recovery in semiconductors outweigh the slump in automotive, which has traditionally been a really important market for them? And of course, we can't forget about China.
Yes, China. Always a bit of a question mark. They did see a surprise jump in revenue this quarter. But is that sustainable?
That's the million-dollar question. It seems like the jump was mostly due to some large electronics orders. But the broader economic picture in China is still pretty uncertain. Plus, they're facing intense price pressure there. Which brings us to another key takeaway from this call.
Margins are getting squeezed.
Exactly. To stay competitive, especially in China, Cognex is having to lower prices. And that's impacting their profitability. This isn't just a temporary thing either. They've said that this pricing pressure could be a factor moving forward.
So the headline revenue numbers look good, but investors really need to pay attention to those margins. And speaking of paying attention, there was a lot of talk in the call about their new strategic initiative targeting these emerging customers. This seems like a pretty big deal.
It is. Cognex is basically making a bet on democratizing machine vision. They're trying to make their technology accessible to a much wider range of customers, moving beyond those large tech-savvy companies that have been their bread and butter for so long.
So think smaller businesses, maybe companies that haven't really used this type of technology before. What's driving this shift?
I think there are a few factors. First, they're developing simpler, easier-to-use products that don't require a whole team of engineers to set up. Second, they're building this new sales force that's leaner, more agile, focused on reaching this new market. Think recent grads, hungry and eager to make their mark.
And are they actually making any progress with this initiative?
The early results look promising. They've already signed on 3,000 new customer accounts this year. Plus, those new salespeople are already bringing in serious sales, reportedly about $1 million per week.
That's impressive. But it's still early. What will determine if this gamble pays off in the long run?
A few things, I think. Can they scale this initiative effectively without hurting their margins? Will these new, smaller customers eventually become more reliant on Cognex's technology, leading to those more sophisticated, higher-margin sales down the line? And can they navigate the potential risks of cannibalizing their existing customer base with these lower-priced products?
So lots of unknowns, but definitely a key development to watch. Before we move on to the bigger implications of all this, let's touch on one more thing that stood out in the call. Their emphasis on AI.
Absolutely. AI is being woven into everything Cognex does. They're integrating it into their products to make them more powerful, more versatile, and easier to use. They even highlighted this new AI-driven optical character recognition tool that requires almost zero setup.
It sounds like they're really trying to stay ahead of the curve in a technological landscape that's changing so rapidly. And they're betting that AI is the key to unlocking new markets and driving future growth.
Yes.
It's kind of like Cognix's performance is a reflection of the whole industrial automation market right now. Like we're at this crossroads with some things pushing for rapid adoption and other things holding it back.
If you think about it in those terms, what's happening with Cognex and automotive? It's not just them. That whole sector is struggling with big disruptions, supply chain problems, the shift to EVs, economic uncertainty, and it's creating this ripple effect across the whole automation landscape.
And then on the other hand, you've got their success in logistics, which shows the other side of the coin, the unstoppable growth of e-commerce, and this need for more automation in warehouses and distribution centers.
Right. It highlights this trend, where some areas are hesitant to invest in automation, other areas are being pulled into it because they have to. They just can't keep up with demand without embracing these new technologies.
And then there's semiconductors. They always seem to have their own rhythm, booming and busting without any regard for what the rest of the economy is doing.
Yeah, semiconductor investment is like that. It's cyclical, driven by things like memory demand, chip fabrication capacity, even geopolitical tensions. So yeah, Cognex is benefiting from this current upswing, but investors need to remember that could change quickly.
So lots of moving parts here,
Mhm.
both for Cognex and the industry as a whole. What are some of the key questions that investors should be asking themselves as they try to make sense of all this?
Well, let's start with Cognex gamble on these emerging customers. Can they really break into this mass market? Can they make it a real growth engine for them? It's a bold move. But scaling an initiative like that comes with its own challenges.
What kind of challenges are we talking about? Because on the surface, it seems like a smart move. Go after a wider customer base, especially when the traditional markets are struggling.
I think the big question is profitability. Can they keep their margins healthy when they're selling these lower priced products? To customers who are less tech savvy, don't forget they're already dealing with pricing pressure, especially in China. And that could get worse as they go after this mass market.
So it's this balancing act. Grow this new customer base, but don't destroy your overall profitability.
Exactly. And then there's the execution side of things. Can they build the right products, the right sales infrastructure, the right go-to-market strategy to succeed in a market that's totally different from what they're used to?
And we can't forget about the wild card in all of this.
Yeah.
China. It's such a huge potential market, but it's also incredibly complex and challenging. Can Cognex turn things around there? Or are they going to be stuck in this cycle of price wars and shrinking margins?
It seems like their plan is to go for market share in China. Even if it means accepting lower margins for now, it's a gamble, and only time will tell if it pays off.
So much uncertainty, but I guess that comes with the territory. When you're dealing with companies in such a fast-moving space, what should investors be watching for in the coming months to get a better sense of how all of this is playing out?
We'll obviously keep an eye on their next earnings call, but beyond that, I'd say look for signs of progress or lack of progress in their efforts to reach these emerging customers. Are they still adding new accounts at a good pace? Are they managing to keep their margins up despite the pricing pressure? And are they seeing any signs of success in China?
All great points. And of course, we can't forget about the overall macroeconomic picture. If the global economy weakens, that could put a damper on industrial spending across the board, no matter how well Cognex executes its strategy.
Absolutely. You can't ignore those bigger economic forces. And on the technology side of things, keep an eye on what's happening with AI and 3D vision. These are going to be major growth drivers for Cognex and for the whole industry. So pay attention to what they're doing in those areas and how it compares to their competitors.
It feels like we've just scratched the surface here. There's so much to think about when you're evaluating a company like Cognex.
That's what these deep dives are all about. It's not about giving you all the answers. It's about helping you ask the right questions and see the connections between all these different pieces of information.
So let's switch gears one last time and talk about what this all means for investors. What should they be thinking about? As they assess Cognex future prospects, we've spent a lot of time on Cognex financials and their strategy, even the broader industry trends. But I want to step back for a second. Look at the really big picture. What does all of this mean for the future of manufacturing?
That's where it gets really interesting. Think about what Cognex is trying to do. Democratize machine vision, put these powerful AI tools in the hands of more and more businesses. What happens when that technology becomes commonplace?
Yeah, it's not just about giant factories anymore. Could we see a surge in smaller, more specialized manufacturers? Maybe even a revival of local production?
It's definitely possible. And if you connect that to all the worries about supply chains, it paints a pretty interesting picture. What if companies can bring production back home? Rely on smarter, more adaptable automation instead of these huge factories overseas?
That would be a huge shift. And it makes you wonder about the workers. If AI and robots are doing more of the seeing and deciding in factories, what does that mean for human jobs?
It's a really important question about the future of work. It's not necessarily about mass job losses. It's more about a shift in the skills that are in demand. We'll probably see more need for people who can program these systems, maintain them, troubleshoot them, being able to analyze the data these systems generate. That's going to be crucial too.
So less manual labor, more technical expertise. But I wonder if it goes even further than that. Will we see entirely new job categories, jobs we can't even imagine right now? It's like trying to predict the internet's impact back in the early 90s.
Exactly. We're at the very beginning of something huge here, and the ripple effects are going to be felt everywhere. I think Cognix's story is like a microcosm of this whole transformation. Whether they succeed or fail, it could tell us a lot about what's in store for the entire manufacturing sector.
So for investors looking at Cognix, it's about more than just their PE ratio or their dividend yield. It's about understanding their place in this big story, this story of technological change and economic evolution.
Exactly. This deep dive has given you the raw materials, the insights, the trends, the key questions. Now it's up to you to connect the dots and make your own informed decisions.
That's what the deep dive is all about, giving you the knowledge you need to navigate this complex world. Thanks for joining us on this journey. Until next time, keep exploring.